Today, we're going to talk about those darn DPAs. And specifically, we are going to identify and acknowledge some of the objections and misperceptions that are out there and perhaps rampant about down payment assistance. But we're also going to talk about overcoming those DPA objections, those misconceptions about down payment assistance. So we know that there's some confusion and some misleading information or misperceptions about DPAs, and we want to address those. We want to acknowledge those that are real, and of course, perception is reality, so we have to acknowledge that too. But our goal today is to tackle some of the biggest objections that we've been hearing for the last year or two, and put them on the table and offer up some solutions. These solutions have come from your peers. This information was not put together by Down Payment Resource. This was compiled by Down Payment Resource from your peers, real estate agents and loan officers and housing counselors and others in the industry across the country over the last year. This has been refined as we've gone along. So you're hearing from DPA experts. You're hearing from real estate agents who have used these programs for years and navigated many different kinds of markets. You're hearing what we've heard from loan officers who are expert at these programs and have built their business working with first-time home buyers and using down payment assistance programs. So I wanted to be clear about that up front. This isn't necessarily our content. We packaged it up, but we got these ideas. We sort of cataloged all of these ideas from your peers around the country. So again, I am Sean Moss with Down Payment Resource. Today, we're going to talk about briefly the state of down payment assistance, but the crux of what we're doing today is breaking down what we believe to be 5 of the top DPA obstacles. Maybe they're the top 5, but 5 of the top DPA obstacles that we're all facing in the market today, and solutions. So we're going to identify and acknowledge the issue, and then we're going to talk about solutions. And we're going to do that for 5 of these. We'll also give you a little bit of information about next steps and best practices, but the crux of the event today is to understand and acknowledge what's going on with DPAs, or what people believe is going on with DPAs, and then address them with solutions. A little bit about us. We at Down Payment Resource track and monitor all of the 2,200 some homeownership programs around the country for down payment help, closing cost help, tax credits, affordable first mortgages, and more. Our technology helps you connect home buyers to down payment help. To do that, we have integrated into MLS data sets, property listing data. Many of you with us today are members of some of our partner MLSs. We'll cover that at the end here. We also work with lenders. We have enterprise tools for lenders to find and review and onboard and approve and track and monitor down payment assistance programs. We also have a subscription tool for real estate agents and loan officers who want to engage consumers in their market, and we'll talk about that as well. But that's a little bit about what we do. Essentially, we are here to help you connect aspiring home buyers to the down payment help they need. Now, what's available across the country? We're going to talk a little bit here about the state of down payment assistance, because that's a great segue into some of the obstacles that we see in the market. So across the country, of the 2,200 plus programs that are out there for home buyers, 74% of them are some form of down payment or closing cost help. Now that can break down to several categories. There are grants, which are true gifts. There are various types of second mortgages, so deferred loans, forgivable loans, and even repayable loans that have a monthly repayment right out of the gate after closing. And then some of those down payment programs, especially from state or local housing finance agencies, or HFAs, those can be combined with first mortgage, affordable first mortgage options from those housing finance agencies. Now, in addition to down payment and closing cost assistance, which is clearly the majority of homeownership programs, there are affordable first mortgage loans. There are mortgage credit certificates, which are tax credits, and some other less common programs that we won't get too much into. But affordable first mortgage loans can offer below market interest rates. lower or no mortgage insurance, higher LTV financing uh, can be combined with down payment assistance programs. And those affordable first mortgages are typically coming from your state housing finance agency, or in a lot of markets, local housing finance agencies. There are still mortgage credit certificates out there. In the last year or two, it's been tough for especially state housing finance agencies to keep up with the demand for mortgage credit certificates while demand for their mortgage and DPAs has been so high. But a mortgage credit certificate is a federal income tax credit that allows you to claim part of your mortgage interest paid as a tax credit and then claim the rest as a mortgage interest deduction. So super cool programs. And that kind of gives you an overview of the nature of homebuyer help around the country. But most of these programs, and when I use the term DPA, this is kind of broadly what we're talking about today, but there are many different kinds of down payment assistance, or even more broadly, home ownership assistance programs. Now, who offers these programs? Every state has a state housing finance agency, if not more than one. There are local housing finance agencies in a lot of bigger markets. There are cities and counties that offer down payment assistance. Employers may offer down payment assistance. There are many housing nonprofits across the country that offer maybe down payment or closing cost help in addition to the homebuyer education classes that they offer, and or housing counseling services. And beyond that, we have the Federal Home Loan Bank Network, which offers funding for down payment assistance across their network of member banks. There are community development financial institutions, or CDFIs. There are local housing authorities. There are community land trusts, and many more. There are all kinds of agencies and organizations across the country dedicated to solving the affordability concerns in their market, and in part to do so, offering down payment help, closing cost help, homebuyer education, housing counseling, tax credits, and more. Now, as far as trends with down payment assistance programs, just about every state housing finance agency had a record year in 2020 and a record year in 2021, and that was all purchase business. So we had a lot of refi going on those last couple of years, right? But housing finance agencies were focused on purchase business, helping the home buyer. In 2022, we have seen that so far year to date kind of peter out a little bit, because just as we all are, the providers of these DPA programs are facing the same challenges with rapid or rampant appreciation, even though that may be abating very recently. We're still dealing with appreciation, right? Just slower potentially. But we also have rising interest rates, even as of this week, another big increase in rates. We know we have inventory shortages. We're going to talk about a lot of these things as we go today, but for those and maybe some other reasons, we have seen sort of a slowing of down payment assistance activity this year, but we have also seen new state and local down payment assistance programs continue to launch in markets all over the country. We are adding programs, we are adding DPAs to our system at probably a faster clip in the last 6 months than in many years prior. And also, just so we're clear, there is help in every market. There is no county in the US that does not have some form of down payment assistance available, at the very least, because every state has a state housing finance agency whose programs are available across the state. And then you layer in all of the local and municipal and nonprofit and other opportunities, and there's help everywhere, literally. 84% of all DPAs are currently funded, active, and available. So while there are some types of down payment assistance that are, you could call it seasonal, they may run out of money before the end of the year or their fiscal year. There are a lot of programs that are perpetually funded. But right now, 84% of all programs are funded and active. That is a normal number. That is absolutely a normal threshold for funding for DPAs across the country. And then homebuyer education classes are being done online. In the last couple of years, most, if not at least many, DPA providers the nonprofits, the housing finance agencies, and so forth, have adopted online homebuyer education classes, which is important because one, every buyer who wants to access down payment assistance is probably going to have to complete a homebuyer education class. Two, those classes don't just teach those aspiring home buyers about the home buying journey. They also teach them about the long-term, the obligations and responsibilities and pitfalls of long-term successful home ownership. And for those reasons, we're a big fan of home buyer education classes. But third, they're also, because they're online, allow people to do it at their leisure, complete it faster, complete it on their own time, complete it in their own space. And I would suppose fourth, because they can do that, there's no reason to wait to have a client or a prospective home buyer client go ahead and complete their home buyer education class. If you expect or they expect that they will need or will benefit from a down payment assistance program, the certificate of completion that they get is good for a year. So, and often that can be one of the hiccups, and we're going to talk about this. That can be one of the hiccups along the way that causes a delay. So, oh man, we forgot to do that homebuyer education class. We forgot that was a requirement. Get it done early, get it done before pre-qualification, talk about it with the loan officer, and make sure that that prerequisite is met and doesn't cause delays. But all of this is to say, before we dig into our top 5 obstacles, just know down payment assistance is still widely available. There is, as you probably all know, more attention on affordability concerns and issues now than in many years past, and DPAs are not going away. We are seeing more down payment assistance programs, and we're seeing them come to market faster than we have in years. With that, let's move now to our top 5 obstacles. And by the way, normally when we do this webinar, we're actually interviewing a real estate agent and or loan officer, often a team that has partnered up and works together so they can address it from their perspective. But we can't always get those guest speakers. Let us know if you'd like to be one of them. We would love to chat if you're doing a lot of DPA business. Throw that in the chat or the Q&A, and we'd love to touch base about potentially getting your perspective and maybe presenting this with you. Nonetheless, what we've done here is compile what would normally be an interview with some of your peers. And in order to keep getting this out to everybody, we're presenting it to you on our own, essentially, but as if we were doing so with one of your peers. So over the last year or so, we've identified these 5 obstacles. Now, obviously, there are other concerns, right? But we want to take 5 obstacles related to down payment assistance or that could be addressed by down payment assistance and apply what we've learned and share with you what we've learned from your peers. Number 1, inventory is limited and unaffordable. Not a surprise, acknowledging the issue. We'll get to the solutions here in a moment. Number 2, there is still rampant confusion about down payment requirements among prospective home buyers. We'll address that. Number 3, sellers refuse or are leery of contracts that involve down payment assistance or, quite frankly, even government financing, FHA, VA financing. and maybe there are some appraisal concerns mixed into that, right? But so acknowledging the issue, we'll get to solutions. Number 4, down payment assistance extends or prolongs or delays the transaction. We're going to address that. And then number 5 is going to be establishing agent and loan officer partnerships. It may already have come up in the Q&A, but the most common question we get from real estate agents in every training we ever do, and it's been this way for a long, long time, is how do I find loan officers who can help me with down payment assistance programs? How can I find lenders who can help with DPA? Loan officers on this call, not kidding. That is far and away the most common question we get. So, we're going to talk about, with regard to number 5 here, what can you be doing to get the word out as you look for purchase business, knowing what realtors are facing and what their clients are facing? So let's dive in. Let's tackle number 1 here. Inventory is limited and unaffordable. So what we're going to do here is we've got a slide for the issue and a slide for the solutions. And I'm just going to kind of talk through what we've learned, what we've compiled. what your peers have told us. So what is the problem here with regard to inventory? We have historically low inventory. That's not a secret. I'm preaching to the choir here. Days on market is decreasing. So we're trying to tighten up the closing timeline. There's enormous demand from potential buyers, but limited supply from potential sellers. And we're not meaningfully increasing supply, affordable supply in particular. We also have been dealing with rapid appreciation for a couple of years now. While that may be abating here or slowing, only very recently, that's just a slowing of appreciation, right? It doesn't mean we're depreciating now. Prices aren't going down, they're just going up slower. All this ultimately means that buyers struggle to compete in a lot of ways. So I'm stating the obvious and I'm kind of laying out the general issue here. But with regard to inventory, if that's the problem, we want to look at these through the lens of down payment assistance and these homeownership programs and think about what we can do. And not everything here is through the lens of just DPA alone, but what can we do? What are your peers doing? How are your peers addressing this? What are they seeing in their market? Consider alternative inventory sources. This is a short list, but there are agencies, housing agencies, nonprofits, housing authorities that may own property, and they can get funding from the federal government, funding from other sources to purchase and potentially rehabilitate and resell properties. One way of doing that is through community land trusts. Are there agencies or municipalities in your markets that own property and maybe purchase it, rehabilitate, or refurbish the property and then resell it, sometimes at cost or below cost? Are there community land trusts in your market? A simple Google or use down payment resource would tell you if there are land trusts that offer. Basically, the land trust model is you're buying the home that sits on the land, but you don't own the land. That's the land. It's in a trust, right? A land trust. That means the purchase price can be reduced and is reduced by the value of the land because you're not buying the land. It's one more measure of affordability, right? Been around for a long time, but we've seen a lot more attention on community land trusts in the last year or two as a way to kind of navigate inventory woes, right? What about homes that need minor repairs? So I'll give you an example. I was at an event, this was in Seattle, maybe 6 years ago, so before the pandemic, but Seattle was booming at the time, rapid appreciation. And we heard a story from a real estate agent who was telling clients, hey, look, let's not look at listings as they hit the market. Let's look at the ones that have been out there and didn't get snatched up in the first go round. So the question was asked, well, how long are you talking about? Something that's been around for months, there must be something wrong with it, right? And the answer was no. And that was a market much like what many of us are seeing today in terms of rapid appreciation, compressed closing times. The answer was no, a week or two. If it's been on the market a week or two, then it didn't get snatched up out of the gate, but maybe it just needs minor repairs. That doesn't mean there's a hole in the roof. That doesn't mean there's no windows. It doesn't mean that there are no appliances or the plumbing's been ripped out or anything like that. It may just need a little bit of TLC or a little bit of update in order to be brought current, right? So are there opportunities in your market for homes like that they're not beaters? That's not what I mean. But, with a few $1,000s in repairs, or perhaps with a down payment assistance program that will allow some of the money to be used for minor repairs, or with a 203K or something like that. Maybe there are homes out there that can expand the inventory selection a little bit. And that's what we're looking for, right? Where are little incremental additions to the inventory selection that we can start to choose from? What about coming soon properties? Are you connected with agents that within that network may be communicating about upcoming opportunities? One thing we've heard a lot about, more about in the last maybe year or so, what about duplexes, triplexes, quadplexes? Those are still residential properties that you can mortgage, right? And a lot of down payment assistance program providers will allow their DPA to be used with the purchase of a 2, 3, or 4 unit residential property, so long as the buyer is going to occupy that property as their primary residence. So as long as they're moving in and owner occupying one of the units in, let's say, a duplex, the other one could be rented out. There's a cash flow opportunity for a first-time home buyer. Now that may need to come with some training, and obviously there could be some pitfalls there. So we want to make sure that a buyer that might go down that path is equipped for success. But again, that's another little incremental addition to inventory. What about manufactured homes? We've heard more and more over the last few years, manufactured homes are increasingly looking like a site-built, stick-built home, right? Modular homes, same thing. The quality is great. They may even appreciate. So another inventory alternative, and maybe partner with an organization like Next Step, or others that are working with manufactured home buyers, manufactured home sellers. And so anyway, those are inventory alternatives. Now you may have some other ideas. We welcome those ideas. Throw it in the Q&A. If you've got another idea about alternative inventory sources, then we'll share that with the group. Now, also with regard to inventory, we do have to counsel buyers about what the process is going to look like, the journey from pre-qualification to searching for a home to winning a bid, right? And we need to make sure they understand what the competition is going to look like. You're going to face a bidding war. Probably still, most of you are still seeing bidding wars, right? I was just told the story in the last, 3 or 4 days. It was this week. I was told a story about somebody who listed their house, sold in a day. 8 bids, sold in, it wasn't even a day. It was like 6 hours. Anyway, you all know the story, right? I don't want to preach to the choir. Point is, buyers need to be counseled about what that's going to look like going into it. And we need to make sure they're prepared up front. I'll come back to that later. When it comes to inventory and unaffordability, we also must be looking at the down payment assistance programs available in the market. If a buyer is income and credit qualified, but doesn't have the down payment, make them a buyer. There are programs that can create that transaction for you. And we need to give credit where credit is due. If the DPA can create a transaction that otherwise wasn't going to happen yet, then let's give credit where credit is due. Same thing for mortgage credit certificates. Same thing for the affordable first mortgage programs we talked about, and all of these other programs that we track and monitor in Down Payment Resource. And lastly, regarding inventory, calculated patience. This idea came from a real estate agent that presented this with us once in Houston. The idea was narrow down the buyer's list of must-haves. We want them to be ready to strike, meaning ready to make an offer on the house that is good enough, right? It may not be perfect, but I mean, honestly, how many of us bought the perfect house our first time? Not me, but nonetheless, narrow down that list of must-haves, figure out what you really do need and what you can afford. But point being, be ready to strike, be ready to make that offer and compete on that offer when the right property hits the market. Again, it's not going to be the dream castle, but if it's a good starter home, if it works for you, if you can make it work, then be ready. But that means that maybe we're not going to get the fenced in yard, or maybe we're not going to get the brand new granite countertops. Maybe there's a sacrifice in there, but nonetheless, if buyers are counseled about all of this, then I think we can help overcome some inventory and unaffordability issues. Moving on, number 2, confusion about down payment requirements. The first 2 points here are actually citations from the Urban Institute's report from 2018 called Barriers to Accessing Homeownership. All still very relevant today, despite having gone through the pandemic since. 65% of prospective buyers, according to that study in a survey of prospective homebuyers, 65% believe they need at least 15 or 20% down. 76% of those same prospective homebuyers, through a consumer survey, responded that they had little to no familiarity with low down payment programs. Now, that doesn't even mean down payment assistance. That just means FHA, 3.5% down, conventional, 3% down, 5% down, USDA, within 0% down, VA, 0% down. Those are low down payment mortgage options. But That's 3/4 of prospective homebuyers that weren't even aware of those low down payment mortgage programs, not to mention down payment assistance and all these other programs that we track and monitor at Down Payment Resource. So, home buyers beyond that, home buyers also are not familiar with industry terms. They're not familiar with mortgage guidelines, especially first time home buyers. Millions of home buyers are sidelining themselves for several reasons, one of which is they don't think that they're qualified. There are millions of potential home buyers, current millennial renters, that are income and credit qualified, but they don't think they have enough saved for a down payment. As pointed out above, one of the biggest reasons is that magic myth, the idea that they have to have 20% down in order to consider purchasing a home. Everyone on this call, everyone on this webinar knows that's flat out false, right? But the problem is not what we know. The problem is what our prospective clients know or don't, right? So we need to make sure that our marketing is getting to those consumers and especially combating the myth that you need 20% down. We have to make sure that our marketing messages are addressing not just the requirements, but the solutions for down payment. We need to make sure that they know you don't need 20% down. You can get into a home with 3%, 3.5%, 5% down. If you're a qualified veteran or buying a qualified rural home, you can use VA or USDA, right? We all know this intuitively, but we need to make sure that prospective or aspiring home buyers, especially first-time home buyers, they understand that you don't have to have 20% down. Now, as far as confusion about DPA requirements, let's be honest, part of that is about education, self-education. So there is a path to a bigger purchase pipeline here, real estate agents and loan officers. If you're willing to get outside of your bubble, educate yourself a little bit about the down payment help that's available to your clients, and make yourself aware of even just a couple of programs in your market, and then start to expose those down payment programs to your clients. Real estate agents, we know the question is going to be, and I'm seeing it in chat right now. I'm seeing all kinds of it. And loan officers, we told you, look in the chat, it's there. Real estate agents need loan officers who can help them with down payment assistance. So educate yourself about some of the DPA programs in your market. Real estate agents, that includes you, right? There's no reason you can't educate yourself about the basics. Yes, rely on the loan officer for the details and the expertise, but learn enough about the basics to be, I won't even say to be dangerous, to be confident and coherent in opening up and continuing conversation with prospective home buyers and letting them know that there's help out there for the down payment obstacle, because you know they're facing that obstacle, right? Expose those programs to your clients. And one way of doing that is to tell down payment assistance stories to prospective home buyers. Talk about who you helped recently. We see this a lot, and we talk about this in one of our other webinars. We give a very specific example from social media, but tell your prospective audience, your prospective home buyers, your prospective clients about the down payment help you got a client recently or in the recent past. For example, hey, I just worked with home buyer A, and we got them $12,000 in down payment help. They got into their first home. Congratulations, home buyer A. That's a great story to tell to home buyer B, who isn't ready yet or doesn't think they're ready yet, but they see that from you, it resonates, and they're going to reach out and talk to you. Also, sort of the converse of getting outside your bubble, and not to provide conflict here, but stay in your lane. If you're not willing to go educate or don't want to educate yourself about down payment programs, that's fine. You're probably on the wrong webinar. But nonetheless, consult with your peers, consult with your loan officer partners, leverage their expertise. I mentioned that earlier. You don't have to be an absolute expert in all the minutia and nuance of even one, not to mention many down payment assistance programs in your market, to be, productive and dangerous, but it doesn't hurt. However, you need somebody that is. So if you're a real estate agent, give yourself a basic framework, basic understanding of the DPA programs in your market, but leverage your loan officers, leverage your other partners, which includes some others I'll talk about here in a moment, and make sure that you've got somebody that you can ask those detailed questions of or refer your clients to get pre-qualified. So what are those tools and resources you can rely on besides your loan officer partners? Downpaymentresource.com. You can do a search anytime there and find out which programs are available in a given city, county, at a specific address. Also look at your local DPA providers. Where are the city programs, the county programs, the nonprofit programs? Who's offering them? They may have some other services and other tools and resources and content that you can use. Your state housing finance agency has multiple programs wherever you are. You guys are all over the country, but your state housing finance agency has multiple programs available across the state. Get to know those a little bit, but they may also have marketing materials for real estate agents. They may also have events or classes you can teach or networking opportunities. They can be a great resource, not just to learn about their program, but to network and to build your pipeline and to build your referral network and to access loan officers who do their program and do it well. Lastly, take a look at the homebuyer education course itself. And actually, I'll come back to that here in a few minutes, but that can be another interesting tool if you think about it that way, by attending a homebuyer education class, maybe with a client. But like I said, I'll come back to that last point here in a few minutes. Now, moving on, number 3, the third obstacle that we face regarding DPAs. Sellers are refusing contracts, not even just with down payment assistance, but as we've been hearing from your peers, with government financing in general. They're going to balk at FHA, VA, USDA. They want to see conventional. We suspect part of that is that the agents representing those sellers, the listing agent, misunderstands DPAs. Maybe a bad past experience has soured current attitudes towards DPA. So a DPA was involved in a transaction, last year, a couple years ago, and it didn't go well for any number of reasons. But that has soured their attitude towards down payment assistance in general, as if they're all the same, or as if a bad past experience was truly the fault of or caused by the presence of a down payment assistance program. Not always the case. We'll come back to that. Contract offers don't frame DPA as a value add. In particular, if the program allows you to cover closing costs, make sure that's accounted for and leverage that opportunity for all it's worth. Sellers erroneously fear delays. And again, maybe this is because of a bad past experience or just because of this misperception that has floated out there for years, that it's almost like people believe that just the word DPA means takes longer. DPA equals takes longer, as if it's that simple. It's not. We hear from loan officers all over the country all the time, including, earlier this week, I was on a panel with some loan officers in California. And those who do these programs and know them well and do them frequently, they close in the same amount of time as if it were 20% down conventional. And they'll outright tell you they do. And they'll stake their reputation on it, which we're going to get to here in a moment. So sellers are refusing contracts with DPA. What we think this stems from is that sellers and the listing agents represent them. They want certainty, obviously. Who blames them, right? But they associate DPAs with a lack of certainty. So what can we do about this? Agents and, yes, I underlined and italicized, loan officers, leverage your reputation as a DPA expert. Agents, real estate agents, to the extent that you are a DPA expert and confident in communicating with the listing agent and the seller, do so. But absolutely, loan officers and real estate agents, you should expect your loan officers to get on the phone with the listing agent. And I'm sorry, I said listing agents, real estate agents. So if you're representing a buyer, you should expect your loan officers to get on the phone with the listing agent and the seller if need be, and make sure they understand, I, as a loan officer, am an expert at this DPA program. I understand the closing timeline. We've done all the preparation and preventative work, and we're going to close on time, just as if they put 50% down or they were, 20% down cash buyer. And we hear this from loan officers. This comes from loan officers saying, hey, you know what I do? You know how I stepped in? You know what I do for my real estate agents? When we get concerned or when we really want to win a bid and we want to get this offer through and earn this contract, I just pick up the phone and I call the seller and I say, hey, look, I'm the DPA expert here in this market. I know exactly what I'm doing. I've done 10 of these this month. I've done 50 of them this year. I'm closing you on time. Accept the offer. Yeah, and obviously I'm just kind of making up a script there, but that's the gist of it. I don't fear an emotional plea. I'll let you take that for what you want it to mean. But we've heard from agents and loan officers, it's okay to make a plea for the home. Leverage the value of a DPA. I hinted at this a moment ago. If the down payment assistance program allows you to cover closing costs, one, you don't have to ask the seller. Two, that's higher net proceeds for the seller because they're not paying closing costs. Although we know most sellers probably aren't doing that today. But nonetheless, if the DPA will allow you to cover closing costs, then use it for that. And then don't go ask the seller, make your bid more competitive. And the remaining DPA funds maybe can lower your LTV and get you into a better first mortgage. So to the next point, I'll go back to that scenario that I mentioned earlier. Let's say you've got a client that is kind of right on the cusp of qualifying for FHA. Maybe they've got a few $1,000s, but not quite at 3%, and they got to cover closing costs. They're looking at an FHA loan. And let's say you can get them $10, $15, $18,000, whatever, in down payment assistance. Or, and maybe in Southern California, it's 40 grand or whatever in down payment assistance. But point is, that could be enough to get them over the 3.5% down payment requirement, get them to 5% down and cover closing costs. In the meantime, they have lowered the LTV. They've gotten rid of the upfront mortgage insurance premium for FHA if they can go conventional. They also will have lower cost monthly mortgage insurance with conventional financing. You've lowered the monthly payment by way of lower LTV, no upfront MI built into the loan, and lower monthly mortgage insurance. All three of those lowered the payment, each incrementally, right? Plus, if they got a better interest rate for going conventional, that further lowers the payment. So the point is, think about down payment assistance like that. How can I create a transaction using these programs? How can I make a renter a buyer who was otherwise not going to call me back and not going to answer my marketing and not going to pick up the phone when I reach out to them with exciting news? Now, lastly, provide assurance the deal will get done. So back to loan officers, one of the things that we've heard a lot of in the last year and a half is loan officers picking up the phone, calling the listing agent, calling the seller, and staking their reputation on the transaction, saying, hey, I'm a DPA expert. I know this program. But in order to do so, make sure that whether it's the agent or the LO, you understand the DPA requirements. You understand any nuances of that DPA. Do they have to have a homebuyer education class completed? Get it done up front. Prevent avoidable delays, right? Do the DPA providers want to have like an income review or a review of your final loan app? Does that take a day? Does that take 2 days? And that's not even every program, right? Some do that, some don't. My point is, understand those nuances about the program you're using, prevent avoidable delays, do the work up front to prevent these delays, and then just commit to the appropriate timelines. And of course, I said lastly earlier, but one more point, don't disclose more than you have to. You all are in different states, you have different state laws, state forms. Just don't disclose what you don't have to. That's the simple advice we've gotten from your peers all over the country. All right, number 4, DPA extends the transaction or prolongs or delays the transaction. So I'll harken back to something that I mentioned earlier. Anything can cause a delay, not just the down payment assistance program. But I promise you, if there's a down payment assistance program involved in the transaction, it will get blamed. If there's any delay, it's going to be blamed on the down payment assistance program. And that leads to these rampant misperceptions that DPA equals takes longer. That's just not true. So a few reasons why a delay might happen, even when there's a DPA being used. Perhaps cash to close was not fully investigated up front. Bank statements looked good, but maybe it took longer to find the home and you had to update bank statements and the balance changed. And that's actually different, right? That's not a scenario where it wasn't fully investigated up front, but that's another scenario where it just changed, right? That's got nothing to do with the down payment assistance program. In fact, the DPA is the solution in that case. Or maybe the down payment assistance application was started later in the process. So somebody was using, or somebody was getting pre-qualified, and throughout the process, maybe they started looking at homes and then realized, as in the last example I gave, bank statements changed, and now they're short on funds, or something came up, right? I mean, maybe something came up that required that buyer spend some money. It could have been anything, any kind of emergency, whatever. But if the DPA application was therefore started later in that mortgage or home buying process, that's not the fault of the DPA. It's just that the down payment assistance and the mortgage need to start at the same time. So, whatever may have happened that led to, oh, hey, the DPA is the solution here, somehow gets misrepresented as, oh, the DPA caused the delay. Well, no, actually, if you realize later down the road that you need the down payment assistance, you just solved and saved a transaction. You didn't delay one that was, inevitably going to close. And I'm not saying that there's never a delay because of the down payment assistance. That's not what I'm saying. But we hear day in, day out. We've been doing this for almost 15 years. We've heard it 6 ways to Sunday. There's any reason under the sun to blame a DPA, it's going to happen. Another common one I already mentioned: the homebuyer education class was not completed up front, or somebody, the loan officer, the real estate agent forgot that was a requirement, or maybe even changed down payment assistance programs midway through the transaction for whatever reason, right? Perfectly legitimate scenario. But when maybe the first DPA they were going to use didn't require a homebuyer education class, but the second one did, well, okay, that's, somebody dropped the ball there. It's not the fault of the DPA. The humans involved need to make sure that class gets taken. All right. Now, another part of the problem here is just simply miscommunication or lack of communication among the parties involved. Is everybody communicating? Is everybody on the same page? Are the expectations set up front such that the transaction can progress successfully and smoothly? So what can we do about this idea that down payment assistance prolongs a transaction? Know the DPA you're using. You have to know the nuances. Is there some nuance to a particular program, like suddenly now you have to get a homebuyer education class done, or the ratios are a little different, or there's you have to go get an extra year's W-2 or an extra month's bank statement, or there's when you got your final file, the DPA provider wants to do an income calculation check, or they want to review your final 1003. Those are just examples from among many programs, but know the qualifying criteria, the little nuances like that, so that proper timeline expectations can be set. Everyone understands the application process and review periods from the DPA provider. And of course, I mentioned, do home buyer education early. Those certificates are good for a year. I've brought this up a couple times now. There's no reason to wait on the home buyer education class, in particular because the sooner your prospective home buyer or borrower client takes that class, the sooner they become a better client for you, a better educated, more prepared client for you, and the sooner they will understand the long-term value and responsibilities of home ownership, all of which will play in your favor. Ensure the timely order of all of the other things involved: appraisal, inspection, insurance, title, all of that. Is everybody coordinated? Is all of that getting done as well, so that there's no hiccup there that ultimately looks like the DPA extended the transaction again? And lastly, agents, real estate agents, work with loan officers who know DPA well and who close on time. And again, we'll talk about where to find those loan officers, how to uncover them, and how to partner with them. To that point, number 5, establishing agent and loan officer partnerships. This is the fifth of the 5 obstacles. We're going to wrap it up with this one. I'm going to spend a little more time on this. Well, there's more content, I'll put it that way. So the issue here, agents, I've already said this, look in the chat. Loan officers, look in the chat. It's all over chat. Agents have the hardest time finding loan officers or lenders that can um, that can do three things: offer down payment assistance programs, desire to earn your first time homebuyer business, and are good at down payment assistance. That's what real estate agents need. They need it from you. They need to know that you offer these programs, that you want their business, their first time homebuyer clients, and that you are good at these programs and can be trusted to close on time. Loan officers, and I'm not pointing fingers, we're not finger wagging here. That's not the point. We're telling you what your peers are saying. Loan officers, we're telling you what we're hearing from agents, and you can clearly see it in the chat throughout this whole webinar. Promote your DPA expertise, highlight your DPA program offerings, and get active in your community. I'll explain. Agents, what can we do about this? What can real estate agents do to foster these relationships and partnerships? Start with your current loan officer partners. Who are you working with now? And ask them, do you offer any down payment assistance programs? Maybe this just hasn't come up in conversation with that loan officer, but figure out which DPAs they offer and engage in that dialogue. Maybe there's a solution right there. Ask your peers in your brokerage, ask your broker for recommendations. Maybe they know a loan officer that works with down payment assistance programs and can refer you to them. Educate yourself about a few DPAs in your market. You can go to a homebuyer education class. You can seek out new loan officer partnerships and test their knowledge. That if you are educating yourself about a few of the down payment assistance programs in your market, then you've got a better framework from which to, I want to keep using the word test, but let's just call it a test. Test out a loan officer's knowledge of a particular program and see, how savvy they are about that program. Or do they intuitively know it? Can they answer right off the bat, and are they comfortable doing so? Court loan officers that teach homebuyer education classes. If you know of or are referred to a loan officer that is teaching homebuyer education classes or doing first time homebuyer fairs, they probably participate in down payment assistance programs. Talk to the DPA providers. Ask them about who their top producers are. Seriously, call your state housing finance agency. Tell them, I need a lender in my market. Here's where I am. I've got to have somebody that knows these DPA programs. Who gives you the best files? And I bet they're going to rattle off a few names and give you a few options, right? So talk to the DPA providers. They know who the loan officers are that are doing the most volume, submitting the best files, and closing on time. And lastly, real estate agents, court other agents that are listing, affordable inventory, basically. Do they have a mailing list? Might you become aware of some of their coming soon options? Stay in contact with those agents who have that inventory and build those relationships. Now, loan officers, we end with you. So we're still talking about establishing real estate agent and loan officer partnerships. Loan officers become DPA subject matter experts. That doesn't mean you have to know every DPA or every last little nuance, but you need to be dangerous. And let's face it, the phones aren't ringing off the hook like they were a year or two ago, right? The refi boom's gone. We need purchase business. What we're trying to do here is illustrate a path to that. And again, there it is in the chat. I need a DPA LO in Los Angeles. I'm telling you, loan officers, look in the chat. Become DPA subject matter experts, LOs. Attend a DPA provider's training course. Incorporate down payment assistance program information into your marketing content. Now, I realize you may have some compliance issues, or you got to work with the marketing team. I'm just saying, go down that road. Talk to the marketing team and see what they allow. If a state housing finance agency has some marketing material, are you allowed to use it? Or if amended in whatever way, can you use it? Proactively work with your product development staff. So loan officers, you've got people working very hard in your product division at the corporate level, or maybe it's under secondary marketing, or it's in capital markets at your company, but work with that product team and make sure that you've got the products in place. Well, first of all, understand which products you already have, but also work with them to get more DPAs in place that can help you compete and win business and earn the trust of real estate agents. Host virtual seminars. Partner up with your housing finance agencies and DPA providers. They love to train. They love to expand the training network. There are always plenty of events going on from all these DPA providers trying to educate real estate agents, loan officers, and ultimately consumers. Get involved with those educational opportunities and expand your network that way. As far as community engagement, I know the phones have been ringing off the hook for a few years, but Sales 101, LO 101, what are you doing with the local unions, local employers, local churches and faith-based organizations, et cetera, right? Are you out there talking, engaging, letting them know about your products and programs, letting them know about your DPA experience and expertise, and that you're willing to, go the extra mile to earn that business, help win a bid, help sell a deal, even with DPA. Leverage social media. Back to the marketing piece. I realize that might mean that you need to, get some compliance approval or whatever, but share stories on social media. At least connect with agents. Let them know what you're doing for clients, what products you have, and so forth. And be online when your agents are working. And lastly, all of this is to help build an intake strategy for your agency, your agent partners, so that when they bring new buyers to you, you've got a concrete, structured, plan in place for, okay, first time home buyer, we're going to do this, we're going to do this, we're going to do this. Are we using DPA? Did you take your home buyer education class? Let me get you a pre-qual letter. Let's set the expectations in the timeline and get them out there looking for a home. So hopefully that helps. Those were the top 5 solutions and obstacles. We encourage you to explore creative inventory alternatives. Make sure buyers understand they do not have to have 20% down to buy a home. Leverage the value of a DPA. Make sure sellers understand it. Set buyer expectations and prepare early. Prevent those delays. And then create innovative agent and loan officer partnerships. And remember, DPA customers become customers for life. We mentioned, sharing the story of a client you helped with down payment assistance. That client that you helped with down payment assistance, they're going to remember that. They probably won't remember who they refied with 5 years later, or who they bought their second home from 10 years later. They will absolutely remember that you got them into their first home with a down payment assistance program, and they will send their peers and their family and their referrals your way. If you are a member of any of these MLSs, you are a member of a DPR partner MLS. That means you have down payment resource integrated into your listing data. When you list a property, it automatically gets flagged with a down payment icon. It looks like a $ with a little check mark, and you can explore all of the programs available on any active listing, as can your clients, from your MLS system. And if you are a member of any of these MLSs on the screen now, you also have Down Payment Connect for free. This is a personalized landing page that allows you to generate your own leads unique to you, not sold anywhere else or copied to anybody else. You can use it on social media, your website, your email signature, and let consumers search for down payment programs available to them. Go to your MLS dashboard. Again, if you're a member of one of these MLSs, click the down payment resource button, and then you'll land on your DPR dashboard where Down Payment Connect is waiting for you. If you are not a member of one of those MLSs, or if you are a loan officer, you can go to downpaymentresource.com/DPC and subscribe to Down Payment Connect and start to enhance your marketing and educate more consumers about these opportunities. But just to reiterate, if you're a member of one of these MLSs, please do not go pay for Down Payment Connect. You already have it. Now, if you want to check out Down Payment Connect further and you're not a member of one of those partner MLSs, go to downpaymentresource.com/DPC, and that URL is at the bottom here. And I'll end with this, one more resource for you, and then we'll get into Q&A. We have a Facebook group called Down Payment Insiders. This is about 10,000 real estate agents, loan officers around the country, DPA providers, housing counselors, all sharing ideas and best practices and challenges and hiccups and solutions regarding working with first-time home buyers, and working with down payment assistance programs. So we encourage you to join, listen in, great place to network. Agents, if you're looking for a loan officer, this is a great place to network. Put the word out there. Where are you looking for help? Loan officers, again, agents are going there to network. Great place for you to be as well. But we encourage you to join, listen in, network, maybe even share your own experiences and observations and successes. And with that, I'm going to put our contact information up on the screen. Now, we blocked an hour for this. We have a huge audience. We are probably going to stick around here and answer some questions, but let's defer to, I have to kind of go around the horn here with the team. So Marcy, Amy, you want to go first? Any questions you want to address in particular?
Yeah, Sean, we had a question about, do the DPA programs impact negatively on the lender's bottom line?
I'm not actually sure what that means. Impact negatively on the lender's bottom line. I assume that means, does it increase cash to close? So I'll answer with this. You're providing down payment help, reducing the cash to close. Now, maybe the question is there a fee for down payment assistance? I mean, there may be some costs associated with doing the loan, but it's not like you pay $5,000 to get $10,000 in down payment help. No, there's nothing like that. So I guess I'm just not quite sure I'm answering the right question, but whoever asked, if they want to clarify, that would help.
I think maybe that it wouldn't affect their fees is maybe what the question would refer to. I don't know.
Yeah, Veronica, Marcy, you want to take that one?
I think what maybe they're meaning is that they don't make as much money with a DPA. Is that maybe what they're meaning?
Oh, a loan officer asking that. Okay.
Yeah, that's my guess. And
Me too.
Keep in mind that when you have a DPA, you are still combining that with the first mortgage. So you are making your money on your first, and there may not be as much as far as on that DPA, but with a state HFA, there is an SRP. There is something that you're able to charge and obtain from them. And Marcy, would you have anything to add to that one?
No, what you said is correct. And they don't make less. Just because a lender or loan officer originates a down payment assistance program doesn't mean that they make less on the loan. Like Veronica said, they're still using a first mortgage. They're still getting paid on the first mortgage. They're not making less on a down payment assistance program. I think a lot of times the misconception or misperception is because the loan amounts can be lower. So that's why a lender or loan officer would get paid less on a loan with down payment assistance, but it's not because of the down payment assistance. It's because the loan amount is lower. But with that being said, a lot of the down payment assistance programs out there, their max purchase prices are $300,000-$400,000. So just because a borrower is using down payment assistance does not mean that the loan amount is going to be a low loan amount. So keep that in mind. That is a myth and a misperception. Yes, it can happen because the loan amount is lower, but it's not because they're using down payment assistance.
Yeah, and I see Anita. Anita, thank you for joining. Anita asked, or I think she's commenting that maybe they're referring to commission being less if a realtor was asking that. And no, it doesn't impact your commission at all. Okay, Amy, what else? Any other questions you want to pull out?
Let's see here. We have one lady said one lender stated that it costs the loan officer to do DPAs. I think that we just answered that one, that it does not cost the lenders to use DPAs. And then I have another question. If first-time home buyer has to pay 3.5% down payment, how much help will be from the DPA? Do you want to take that one?
Yeah, that's going to vary by program. The DPAs are not all the same. So looks like Sandy asked that question. If the program offers $5,000, then it's $5,000, right? If the program offers 5% of the purchase price, then that's how much assistance you get. In your example, Sandy, the buyer has to pay 3.5% down. So I think we're all assuming that's an FHA loan. Doesn't have to be, and maybe the down payment assistance is enough that it could be a conventional loan with better MI and so forth. So yeah, how much you'll get from a down payment assistance program depends entirely on which program, and you'll see higher assistance amounts in higher cost markets, generally speaking.
One thing I'd like to
let's-
add, Sean, is we're getting a lot of questions about credit score requirements, minimum credit score requirements. And, one thing to keep in mind with all of these down payment assistance programs, they are all different. Like Sean just said, depending on, the DPA amounts that you're going to qualify for, whether it's a $5,000 DPA, whether it's up to 8% of the purchase price with up to $20,000, whatever it may be, you always want to keep in mind, that's why you want to do your research on these DPAs so that you are familiar with them as well. And then you will know which ones that you can actually connect your clients with to best suit them. But as far as the minimum credit score requirement, a lot of times the minimum is 620. Other times the programs just go off of the program or the first mortgage guidelines. So again, it all just varies on the program. Just get familiar with the programs, and that'll take you as far as you want to go. Thanks.
Yeah, great point. Let's see, Marcy, anything you want to pull out here? We'll go a couple minutes here. We still have a huge audience.
Sure. So there's a question: who is eligible to get down payment assistance? Anyone who their income does not exceed the income limit or the purchase price limit for a particular program typically can get down payment assistance. So as long as the property type, so it's a single family residence, it's not an investment property, it's not a second home, their income doesn't exceed the income limits or purchase price limits for the home, and their FICO score doesn't fall below the minimum or the minimum FICO score, there's a lot of different down payment assistance programs out there for folks. It's not just for people who need down payment assistance. People can get down payment assistance even if they don't need it, as long as they qualify for it. So they don't have to be the low income borrower. Even moderate income borrowers can get down payment assistance.
Yeah, kind of back to Amy's point, I don't know who Christina is, but Christina put in the chat, our DPA program is a minimum FICO of 600 and no derogatory items. That's great, Christina. If you're with a DPA provider, we'd love to learn more about that, make sure we have your program in our system. I suspect we do, but nonetheless, 600, 620, 640, that's typically the floor. We don't see a lot lower than that. But I think what Christina's pointing out is there are also credit qualifying criteria. So, kind of bridging what Tracy and Marcy are saying here, you have to qualify for a DPA essentially as if you would for a first mortgage. Now, the requirements may be a little different between a certain DPA and a certain mortgage, but that's the gist of it. I do want to, maybe Veronica, you can take this one. It's really two questions. I see Eddie has asked, are interest rates lower with DPA programs? And immediately after that, Charles has asked, does the interest rate increase because of the DPA? So can you kind of describe how DPAs can impact interest rate?
Sure. So a DPA may not impact interest rate at all. It may not increase, it may not decrease. However, one thing that can happen is loan level price adjustments. I don't know if everyone knows what a loan level price adjustment is, but based off of a borrower's credit score, DTI, FICO, there are loan amount, sales price. There are certain factors that do play into a first mortgage that could impact rate, and it's not necessarily the DPA that is impacting the rate. There are times where, depending on, I'll give an example. There's actually one program, I need to look to make sure it's still a thing, but there's one that if you actually do your home buyer education prior to doing a purchase contract, there is a $500 credit that is given towards to the borrower. So there's different ways that things can be impacted, but it's not necessarily the DPA impacting it. Now there are state and local HFA programs where you, through the state HFA, which is the Housing Finance Authority for the state, their programs where you get the first mortgage, you get the DPA, they're telling you what that interest rate is. It's not a lender telling you what the interest rate is. The state HFA themselves or the local HFA are telling you this is the rate for the first, and you can combine the second. If you combine the second, there may or may not be a difference. It just depends on that agency.
Good deal. All right. Let's see. Will, anything you want to pull out from the chat? Anything you want to pull out from earlier comments or any open questions?
I think a theme that I saw here is if they're not a member of or working with any of our partner MLSs, how they can, if it's their first time, how they can leverage our website to start to learn more about what may be in their market.
Yeah, so anyone can use downpaymentresource.com, and you can do a search for programs anywhere in the country. If you want to subscribe to, or if you already have Down Payment Connect, that's a great way to get started engaging with consumers, to let them figure out what's out there and start those conversations. Another great place to start is a loan officer. Realtors start with a loan officer that knows these programs. Go out to lunch, have a conversation about the programs, get your education on the basics and what you need to know to go out and talk to consumers, and build up your intake and partnership strategy from there. And then I would say, if you're a member of, let's go back to this. If you're a member of any of these MLSs, then you also have a down payment button in your MLS on all eligible listings. And you can click that button and figure out what kind of down payment help is out there for that listing at that time, at that location, at that price. So we encourage you to utilize that as well in your agent and client views in your MLS system. Some of you are on Matrix, some are on Paragon, some are Flex MLS, and so forth, Stratus, whatever the case might be. So look at the agent listings, look for that down payment button. It's a $ with a little check mark on it, and see what's out there. And that's a great way to find out what kind of programs are in your market and learn some of the details about those programs. Anything else, Will?
No, not at the moment.
All right, Tracy, anything you want to pull out from Q&A and questions here? I think maybe we'll go 2 more minutes, and or maybe we'll go around the horn. If everybody wants to just throw out one last comment or answer one last open question, let's do that, and then we'll call it a wrap here. So Tracy, what do you got?
Well, first of all, I do want to note one of the people in the chat noted that HAR wasn't on that slide.
Oh my gosh, I'm so sorry. That's my fault.
Houston Association of Realtors. They are included
Yes.
as our MLS partners. So if you are a member of that, you have that available to you as well, and we'll get that slide adjusted for future ones. But I did want to point that out. I still have people asking me about the recordings, and I know it's right at the end. So please know we will be automatically sending you a copy of the recording to anyone who has registered. You don't have to reach out to us. We'll get that out to you. It may take us a day or 2 to get it to you, but we'll get that to you. So look for that in your inbox. The only other thing that I did want to note is that we had so many people asking about the home buyer classes. I know you touched on this a lot, Sean, but we kept getting questions about where to find those home buyer classes, and are they specific to each DPA program and things like that. So maybe you can touch on that real quick for everybody.
Yes. So click the down payment button from a listing in your MLS, and you'll see a list of programs. For each program, you can learn more. Click that learn more button. The first thing we show you is who the lenders are. The second thing we show you is how to complete the home buyer education class. And then you've got links and contact info for that provider. So that's one way if you're a member of a DPR MLS partner. Otherwise, go to downpaymentresource.com and you can search for programs. And even there, first thing we show you when you get your results and you start drilling down into the details of a program, then we show you who the participating lenders are and how to complete the home buyer education class. First two things we show you. And if you're using Down Payment Connect, when you get a lead, the lead includes the programs that your lead found and links to details of those programs. Again, first thing there too is who are the lenders? How do I complete the home buyer education class? So there's 3 easy ways that should cover everybody. Veronica, anything else you want to pull out here to wrap things up?
There's so many great questions coming in. I did see one question in regards to how long you have to live in a certain location to be able to get a DPA. And one thing to keep in mind is the DPA is based off of where the property is located they're purchasing. So there's programs where you have to currently be located in that area already, but there's more that it's just where are you moving to. So even if you're out of state, moving into another state, what location is that property you're purchasing is going to be located in is the DPA search area you want to look for. And usually the requirement is you have to be residing in that property within 60 days after closing. There is a question. I saw the DPA social media post resources. Are we allowed to share those on our social media? I'm a realtor. Would there be any compliance issues by adding the logo of the brokerage I'm part of? And I thought I'd let you answer that one, Sean.
So normally our director of marketing would be on these webinars. Share those posts on our social media. You can certainly share or reshare a post. Would be compliance issues. I don't know about adding a logo, and part of that question is probably for your brokerage too. But I tell you what, you can email us at info@downpaymentresource.com. We'll get that to our marketing director, and we'll just get the appropriate answer. That's the best path forward. All right, Amy. One last question, one last comment, one last observation.
I actually do not have everything or anything else to add. You've done a great job.
All right, good deal. So let's see, Marcy.
Nothing else on my side.
All right, Will.
Yes, we had one come in, which I believe is currently being answered. So no, nothing on my end.
Okay, good deal. Well, guys, I know there are still a lot of questions. There was an enormous amount of chat activity. There's no way we could get to all of this, and we're already almost 15 minutes over. Thank you all for sticking around. We still have more than half of our original audience with us right now. So thank you all very much. Our contact information is on the screen here. If you have a question that we didn't get to, or you want to reach out after the webinar, you can do so at info@downpaymentresource.com. And if you want to check out Down Payment Connect, either you have it for free because you're a member of one of those partner MLSs, including Houston Association of Realtors. I apologize for not adding that logo. They are a partner. And if you're not a member of one of those MLSs, then you can check out downpaymentresource.com/DPC to take a peek at Down Payment Connect and see if that's something that can help you and your business. So with that, I'll leave the list of MLS partners on the screen, which includes Houston Association of Realtors. And if you're a member of one of these MLSs, thanks for joining. Thank you to your MLS for promoting this event and for bringing such a large audience to us. We hope this was useful and helpful, and we welcome your feedback. If you have any other ideas, if you want to consider presenting this with us and giving us your perspective, we would love to do that. We do this webinar all the time, and we love doing it with guest speakers. So with that, thank you. Have a wonderful day. We'll get the recording out to you soon, and we appreciate you joining.